Hello everyone, I am Disha. Welcome to Drishti IAS. I hope you are doing really well. So we have started this new series called Economy this week, which will be conducted on every Saturday around 6 p.m. Here we will be covering the top economy related current affairs which has taken place around the week. Okay, so without wasting time, let's get started. These are the topics which we will be covering. Okay, so let us start with the first news, that is RBI's new framework for protection against digital payment frauds. Okay. So the RBI has issued a new framework to protect bank customers from losses arising due to digital payment frauds and cyber scams. Okay, so RBI has released a new framework in order to protect its customers from the digital payments fraud. Okay, you might be aware of the fact that these days the digital frauds are happening a lot. The nature of digital frauds have changed. Earlier, the frauds were of technical nature. That means that a scamster will hack your bank account and he or she will steal your money. Okay, but these days these scamsters will play with you psychologically. They will trick you, they will deceive you to share your OTP. You will share your OTP with them, and that's how they will scam you. Okay, so the nature of crime has changed, the nature of frauds has changed. That's why the RBI has issued a new framework. Now this particular framework will be effective from 1st of January 2027. Very important fact, it will be effective from 1st January 2027. Okay. It amends the RBI 2017 guidelines on customers' liability in unauthorized electronic banking transactions. Now what does this mean? Now this new framework has amended the RBI's 2017 guideline. Now the previous guideline, the 2017 guideline, has protected the customers from the unauthorized electronic banking transaction. Now what does the word unauthorized means? It means that the customer has not authorized any transaction. For example, let's just say I have a bank account, okay, and there is a scammer. He has stole my banking related information and he has done a transaction of worth 40,000 rupees. Now this transaction is not authorized by me. I have not given the permission, but still the amount has been stolen by a scamster. This is an example of unauthorized transaction. Now the previous guidelines used to cover these category of transactions. Means if something like this has happened with you, the RBI will give you the compensation. But the new framework will cover the authorized transactions as well. Okay, if I have to summarize about the RBI's new framework, I'll tell you that RBI will also cover the authorized transactions, but they will be under there will be certain conditions. Okay, let us try and understand. See, RBI has introduced the concept of fraudulent electronic banking transactions. Now, what does fraudulent electronic banking transactions means? It means that transactions are done by you. You have authorized those transactions, but you have authorized those transactions by the means of deception or by the means of coercion. You have been forced to share your OTP details. In a way, you have given the permission, but you gave permission out of coercion. Coercion means what? Forcefully. Now, see, the fraudulent electronic banking transaction include those transactions where fraudsters obtain customer credentials like OTP, through deception. They have gained your OTP through deception. Deception means what? By betrayal. For example, there is a person who has called me and he says that I am from your bank account. Please share your OTP details because your KYC has expired. Okay, you need to tell me your OTP so that I can renew your KYC. Now, if I share my OTP with that person, so I am sharing it through deception, means that person is betraying me. Okay, so this is the category. And the second category is what? When customer authorized payment under coercion. Out of forcefully, I am providing my OTP details. Now, the best example is digital arrest scam. Okay, digital arrest scam. Let us understand this with the help of example. Okay, let us assume that there is a person who calls you and he pretends to be some police officer. He says that I am from a CBI department and your Aadhaar is being used in illegal activities. Okay, so you are digitally arrested. You are arrested. Now you have to transfer this money to our bank account. Okay, otherwise we will arrest you. Now in panic, You have shared certain amount to them. Now this is your coercion. These payments are made under coercion. These payments are authorized by you, but they are done under coercion. Next category of transaction is unauthorized transaction occur due to bank's negligence. See, sometimes due to the bank negligence also the consumer suffer. Okay, let's just say that the bank, due to the bank negligence, your data got breached. Okay, your data got breached, and because of that, you lost your money. So under these three categories, you will be receiving your compensation. It basically means that you have authorized the transactions, but in that case also RBI is willing to compensate you. Okay. Now, what kind of scams are covered? The digital arrest scam. The fraudsters impersonate law enforcement agency and coerce victims. Fraudulent OTP theft. If someone has stole your OTP, okay. OTPs or banking credentials are obtained through deception. Okay, through deception means by betrayal. Okay. Now, what are the conditions for customers' compensation? See, in order to get a compensation, you need to fulfill certain conditions. What are those conditions? Let us understand. The first condition is the fraud is reported within the 5 calendar days. You have to report a fraud within 5 calendar days, which means, for example, if the fraud has happened with you on 1st of July, if you will go to a bank to get a compensation, let's just say on 1st of August, you won't be getting any compensation because there is a condition. You have to report this fraud within 5 calendar days. The second condition is complaint is lodged through National Cybercrime Helpline 1930. Okay, 1930 basically. Okay, this is not important for your exam, but for your general awareness, you can remember this. The third condition is the customer has exercised a reasonable caution while making transaction. See, here RBI wants you to be aware. RBI wants you to be cautious. Okay, so that you do not share your OTPs randomly to anyone. Okay, you have to exercise a reasonable caution. Now, how much compensation you will get? Let us also discuss that. Will you be receiving the full refund amount? Will you be receiving the whole compensation? Let's just say if you have lost 20,000 rupees, will you be compensated the 20,000 rupees? The answer is no. See, it is applicable only for the fraud losses up to 50,000. First condition is that if you have lost amount up to 50,000, then only you are eligible for under this framework. If you have lost 80,000 rupees, then you will not be covered under this particular framework. Okay, because it is applicable only for the fraud losses up to 50,000. How much compensation you will get? 85% of the loss. You will get only 85% of the loss. Let's just say if you have lost 20,000 rupees, you will be compensated 85% of 20,000. Okay, this much amount you will be compensated. Subject to maximum of 25,000. The maximum amount you can get is around 25,000. Is that clear to everyone? All right. Now, it is available only once during the customer's lifetime. You can avail this benefit only once during the customer's lifetime. Once in your lifetime, you can avail this benefit. Through this, RBI wants to tell you that you do not have to be careless. You have to be cautious while making a digital payments. Okay, we can help you, but we will help you only once during your lifetime. Okay. Now, the next news is 9 years of goods and services tax. So basically, India has completed 9 years of GST implementation. That's why this particular news is important for us. We have to talk about GST. Okay. See, GST was implemented on 1st July 2017. Very important date. You have to remember this for your preliminary examination. It was implemented on 1st July 2017. Okay. Now, the GST is a destination-based indirect tax levied on the supply of goods and services. Here you have to understand the two important keywords. The first one is destination-based tax and the other one is indirect tax. Destination-based and indirect tax. Let us try to understand them. See, taxes are categorized into two categories. First one is indirect tax. The second category is direct tax. What do you mean by indirect tax? Indirect tax is that kind of a tax where the amount, the burden of paying that amount is borne by you. But who will collect that tax? Who will deposit that tax to the government? it is the intermediary who will deposit that tax to the government. Let us understand with the help of example. Okay, let's just say that you went to a shop and you purchased a t-shirt for yourself which costed you around 200 rupees. Okay, it costed you around 200 rupees plus 10 rupees you paid GST for that. Now who beared the burden of paying that tax? Obviously you paid that additional 10 rupees to the shopkeeper. But who will deposit that GST to the government? It is the shopkeeper who will deposit that tax to the government. Okay, so here the person who is bearing the burden and the person who is depositing the tax to the government, both are different. Okay, so in indirect tax, this is the condition which you have to fulfill. In the case of direct tax, a same person will bear the burden of paying tax and the same person will deposit the tax to the government. You have to tell me in the comment box, okay, you have to tell me in the comments the different types of direct tax. Okay, so GST is basically a type of indirect tax and it is a destination based tax. Again, let us try to understand this with the help of example. Let us assume that there is a person Mohan. Mohan lives in Mumbai. He ordered a t-shirt from Delhi. Okay, there is a factory outlet in Delhi and he ordered a t-shirt for himself from Delhi. Now, tell me where the goods are being consumed, where the t-shirt is being consumed. It is consumed in Mumbai. Okay, what does this word destination based means? It means that where the goods will be consumed, that particular state will get the GST. So in the example which I have given it to you, which state will get the GST? Obviously Mumbai. Okay, because the goods are getting consumed in Mumbai. Okay, so GST is a destination based and indirect taxes. One important fact, it has replaced the complex system of multiple central and state indirect taxes. Earlier there were too many indirect taxes. The GST has simplified this complex system. Okay, it has eliminated the cascading effect of tax on tax. Okay, GST has eliminated the cascading effect. You do not have to pay the tax on tax. You will get the input tax credit out of that. Okay, now let us talk about the constitutional basis. It was introduced through the 101st Constitutional Amendment Act 2016. This is very important fact for your preliminary examination. If you have to remember this, okay, how can you remember this? 101 Constitutional Amendment Act is associated with GST. See, you might have heard this, okay, 101 rupees is considered as an auspicious amount. Okay, so let's just say if a relatives come to your home and they give you 101 rupees, it is an auspicious amount, it's a money. So 101 can be related to the money. You can link it with money and you are depositing this money to the government in a form of tax. So that's how you can link it and you can remember that 101 Constitutional Amendment Act is related to your GST. Okay. Now in the comment box, you have to tell me that 103rd Constitutional Amendment Act is related to which subject. Okay. All right. Now, let us also talk about the GST reforms. Last year only, certain GST reforms have been undertaken. Okay. See, the major reforms which have been undertaken is, it has simplified the tax rate structure centered around 5% applied for the essential goods and services. There are three main tax brackets which we should be aware of. Okay. The 5% tax bracket is applied for essential goods and services. Why the government has kept the essential goods and services in the 5% category? Because we want these essential goods and services to be in a reasonable range. That's why we have put up in the 5% category. Okay. Now the most goods and services, the broader category of goods and services falls under this 18% tax slab. Okay. You can see these examples. Most of the consumer goods like electronics, banking services, restaurant services are included in your 18% tax slab. Okay. Now there is a 40% tax slab. It is for luxury and sin goods. Okay. Now, why the government has put the sin goods into the category of 40% tax bracket? There is a reason. The reason is that the government wants to discourage the consumption of sin goods. That's why we have kept it into a 40% GST category. Okay. You can see, for example, we have tobacco, online gaming. All of these examples will fall under your 40% GST category. Okay. So the next article is related to Employees Provident Fund Scheme 2026. Okay. So the central government has notified the Employees Provident Fund, that is EPF scheme, replacing the EPF scheme 1952 to modernize the Provident Fund administration and align it with the Code on Social Security 2020. Okay. Now the government has replaced the existing EPF scheme 1952, and we have replaced it with Employees Provident Fund scheme 2026, so that it can be aligned with Code on Social Security. Okay. You are aware of the labor laws, the new labor reforms which has undertaken, okay, which have been implemented last year. So under that new labor reforms, there is a Code on Social Security. Under this Code on Social Security, what the government is trying to do? Here, the government is trying to bring the unorganized sector into the Social Security. The government wants that the unorganized sector should also get the Social Security benefits. And we are working on that direction. Alright. So the EPF scheme 2026 is contributed by Social Security scheme administered by the Ministry of Labour and Employment. Under which ministry it will be administered? Ministry of Labour and Employment. Okay. It aims to improve the efficiency, transparency and portability of Provident Fund services while ensuring the continuity for existing subscribers. Okay. By the recently notified scheme, we will be able to improve the efficiency, transparency and portability of Provident Fund services. It is notified on 29th of June 2026 and it has replaced the existing scheme. Okay. Now, what do you mean by Provident Fund? See, every month from your salary, a certain amount will be deducted. A certain amount will be deducted and it will be deposited in your PF account. And after your retirement, you can use that amount. Okay. All right. Now, let us talk about the contribution. How much percentage of money will be contributed? Okay. So, there are two parties involved here, employee and employer. Employee will contribute around 12% of the wages. Employee will contribute around 12% of the wages. Okay. And employer will contribute the 12%. The percentage is same. The ratio is same for both the parties, employee and the employer. Okay. For example, your salary is 20,000 rupees. So, in that case, how much will be the 12%? It will be around 2,400. Okay. So, out of your salary, 2,400 rupees will be deposited in your EPF account. Okay. Now, there is a statutory wage ceiling which remains 15,000 rupees per month. It is around 15,000 rupees per month. Let us understand that. Okay. Now, if you are earning less than 15,000 rupees, it is a mandate for you. It is a compulsory for you. It is compulsory for you to be a part of EPF scheme. If you are earning less than 15,000 rupees, you have to register yourself under EPF scheme. It is a mandate for you. Okay. So there is a statutory wage ceiling which is around 15,000 per month. Now this scheme has simplified the partial withdrawals for purposes such as medical treatment, higher education, marriage and housing. Okay. Can you withdraw your EPF amount prior to your retirement? The answer is yes. Only in such conditions like your marriage, housing, higher education and medical treatment, you can withdraw that amount. Okay. Now during national disaster, pandemics and public health emergency, the central government may temporarily, it can defer, reduce or suspend the EPF contribution. The government has already done that in COVID-19. Okay. So the government can do that, but only for the period of up to 3 months. Only for the duration of 3 months, the government can defer, suspend and reduce your EPF contributions. All right. Is that clear to you? Let us move forward. The next news is MECON gets Miniratna Category-I status. Okay. So Ministry of Steel has granted the Miniratna Category-I status to the MECON Limited. MECON Limited is a CPSC. It's a government company. Okay. It's a central public sector enterprises. CPSC are those companies which where the government holds the majority shares. Okay. So MECON Limited is a central public sector enterprise. All right. Now this MECON Limited, this company has been granted a Miniratna I category status. Miniratna Category-I. All right. Now this fact is important for your preliminary examination. MECON Limited was established in 1959. Its headquarters are located in Ranchi, Jharkhand. Okay. Administrative machinery is Ministry of Steel. Administrative ministry is Ministry of Steel. Okay. Now let us talk about the Miniratna Category-I status. See, Miniratna status is granted by the Government of India to the profit-making CPSC. Very important conditions. Miniratna status is given only to the government companies. It is not given to the private companies. Always remember that. And it is given to those CPSEs which are profit making, which are generating enough revenue for the government. So as a reward, the government grants them Miniratna status to provide greater financial and operational autonomy. Okay. Now, what is the objective of granting Miniratna status? The objective is to reduce the excessive government approvals and improve efficiency, competitiveness, and decision making. In a way, we are providing them greater financial autonomy. They can take their own decisions without waiting for government approval. Okay. Now, what is the eligibility criteria of Miniratna Category 1? The first criteria to come under the Miniratna category is, first one is profit requirement. They have earned profit continuously for the last 3 years. For the last 3 years, you have to generate enough profits. Okay. The second condition is pre-tax profit. They have earned a pre-tax profit of rupees 30 crore more than at least one of those 3 years. Okay. What is pre-tax profit? Before deducting the taxes, your profit should be 30 crore rupees. All right. Okay. Now, the next news is SHE-LEAPS, that is Self-Help, Entrepreneur, Livelihood and Enterprise Application for Prosperity and Sustainability. Okay, let us talk about this. Okay, now SHE-LEAPS is a digital platform. What is the main objective of introducing this digital platform? It is designed to promote the women-led rural entrepreneurship. It is designed to promote the women-led rural entrepreneurship. We want to make the businesses, we want to make the women entrepreneurs successful. Okay, we want to help them. That's why the government has launched the digital platform called SHE-LEAPS, okay, to promote women-led rural entrepreneurship by providing a unified system for enterprise creation, monitoring, and performance tracking. It supports farm and non-farm enterprises. Very important. If, let's just say in an exam, they give you a statement that SHE-LEAPS supports only farm enterprises, that statement would be incorrect. It also supports the non-farm enterprises. Okay. It supports the livelihood generation, enterprise growth, and financial inclusion of rural women. Okay. Here are some more facts important for your exam. It is developed by the Digital India Corporation. It is developed by Digital India Corporation. That you have to remember. It is implemented under a low-cost platform. Okay. It has covered the 34 states and union territories in total. And it has been implemented through State Rural Livelihood Mission. These are the facts which you have to keep in your mind. Okay. Would you be able to remember them? All right. Okay. Now let us solve some practice questions. Okay. Question 1. With reference to the GST, goods and service tax, consider the following statements. Statement first. GST is a destination-based tax on consumption. Statement 2. It was introduced in India to simplify the indirect tax structure. Statement 3. GST has completely eliminated all indirect taxes in India. You have to choose which of the following statements are correct. Okay. You can pause this video and write your answers in the comment box. Okay. All right. Let us solve this. Okay. So GST is a destination-based tax. This statement is correct. Statement 2 is also correct. It has simplified the indirect tax structure. Now, statement 3, GST has completely eliminated all the indirect taxes. The answer is no. This is incorrect statement. So, if we eliminate B, C and D option, the correct option is option A. Okay, first and second only. Question 2, GST is a tax based on the principle of which broad principle does the GST follow? Option A, tax on production only. Option B, tax on consumption of goods and services. Option C, tax on imports only. Option D, tax on wealth. What is the correct option? Write down in the comment box. Okay. Option B is the correct answer. Tax on consumption of goods and services. Okay. All right. Now, question number 3 is your homework. Okay. You have to read this question and you have to answer this in the comment box. All right. Would you be able to do that? Okay, this is an easy question. Okay. All right. So thank you so much for watching and take care. Goodbye.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.